What's up YouTube? It's Todd Orst here with Tasty Tracker. Today I wanted to talk about day trading penny stocks. I know a lot of people start with penny stocks. It's how I started. It's an easy way to get started because they're so cheap that you can put in $100 in Robinhood, start going crazy, figuring out what all the indicators are and how things work. The thing I think about penny stocks is people tend to hang on to those a little bit too long. So I only traded pennies for maybe a month before I decided I'm not sure I like where this is going, and so I moved on to some more legitimate stocks, and then eventually obviously getting into options. So today I'm going to talk about penny stocks in general and about day trading a bit, but it's basically just penny stocks. So let's jump right in. So what is a penny stock? I consider anything below $10 to be a penny stock. The point is that it's super affordable and you can get a lot of shares for a small amount. Investopedia says it's anything under 5, and so yeah, I have the link there. To me, that's splitting hairs. It doesn't really matter. The point is it's a low value stock. So you need to ask yourself, why are the companies behind these pennies so cheap? Why is the stock price so cheap? So maybe it's a small company that just IPO'd, and they're not they're not getting a lot of market buy-in. So like Lemonade just IPO'd and they went through the roof. A lot of times when there's an IPO, the stock shoots up. Maybe some of these small companies are something nobody ever heard of, or they're a little bit more local, or whatever the reason, and they don't have that same reaction. If you look at the IPO calendars, a lot of times they'll have the big ones listed, and unless it's a very, very in-depth one, there will be other ones that IPO'd that you didn't even see. It's the same thing with earnings. Um, but anyway, the other thing is maybe it IPO'd and initially had that flare up, but then it sort of fizzled out, which happens, half the time. Another thing could be that it's a SPAC, which is a acquisition company, and maybe they IPO'd, but they're still looking for the target. So there's no, they're funded, but they're looking for who they're going to purchase to then take public. But they don't have anyone in their sights yet, or negotiations haven't really been publicized who they are pursuing. So it's the same thing with their warrants and their units. They're all going to be low value. They have value potentially in the future depending on who the target is, but at this point it's unidentified, so there's no reason for the ticker symbol to oh man, ticker symbol to have value. Then another category could be former giants like Ford, who is currently trading at $6, which is crazy. Ford is a huge company. Everybody knows of Ford, at least in America, and I would venture around the world because they are global. But their stock is only 6, and you compare that something with like Tesla, who's over $1,000 now, and you're thinking, what? Ford is bigger. Well, first of all, Tesla has a lot of facets to their business. Another thing is people are pricing in Tesla's potential future growth, whereas Ford is definitely mature and more of a known entity. And then the other thing people obviously, when you're first starting out, aren't really thinking about maybe is the number of shares available. So that plays into it. If there are more shares available, that's diluting the stock price, and so naturally it's going to be lower than if you only have a couple shares available. So anyway, companies like Ford still clearly have value. They are making money. They produce things that people want and buy. So in those situations, maybe they just need to do a reverse split to undilute, what's the word there, concentrate their shares to get those off the market so that their stock prices go up. And I have a really easy example here. Let's get out of this. I use Rite Aid for my pharmacy, and I remember just looking at this chart, it just keeps going down and down and down and down and down, and then they get sub-dollar. And at this point, everybody's thinking Rite Aid is a trash company. Then they do a reverse split. It jumps up to around $8. And as far as I'm aware, that is the only reverse split, although this looks like maybe it could have been. I'm not sure. But but now they're trading up in the $12 to $17 range. So did anything actually change there with the company? Did the management change? Did their finances change? It's doubtful. Excuse me. The What most likely happened is they just did a reverse split, and that gave the impression to the retail shoppers of stocks that Rite Aid isn't a crap company because they're not sub penny. Now they're an $8 stock, and it makes it look more legitimate, especially when you go back to, let's say, the 3 month view. Um, Nowhere on this chart is it below $11. So, if you're a new person coming into Rite Aid, you're thinking that they've been trading up that high for a long time. So, yeah, so that's just an example of where a reverse split, and I don't know 100% of the details, but I do remember them doing that. That's just an example of a scenario. Let's go move on here. Maybe it's a pharmaceutical company that has been developing, but they haven't had a feasible, marketable, sellable drug yet, and so they're not really making any money yet. They're just working on their seed money, and so the company is trading at a very low value. And then obviously, if they do bring something to market, then their stock price will shoot up. If they don't, which actually happens way more than a lot of people maybe know, these pharmaceuticals end up dissolving, and then they'll start up a new one with a new idea and new seed money, and hopefully that one will make money. Another uh, another potential is maybe it was a former giant that no longer has any value. So I'm going to pick on Nokia here. I don't believe that they have value. Their stock's trading at $4. So I see a lot of people who are getting into options, playing Nokia, and maybe even day trading or swing trading stocks, getting into Nokia. And it was like, when was the last time anybody got a Nokia phone? It's been many, many years. There was the Microsoft thing a couple years back, but we all know that didn't pan out. And then even before that, it had been some time. So there was a small spike there with the Microsoft thing, but even that's fizzled out. So then the last thing is junk stocks that have never had value to begin with. And I'm looking at specifically the sub-dollar, sub-penny ones, where you're talking about 62 cents or even the 0.000 kind of stocks. And those are what most people traditionally think of penny stocks. And, the where it falls on in one of these buckets or a different bucket depends on what I would recommend you do with it. So a new small company IPO that's fizzled out, meh. A SPAC, or however you want to pronounce the acronym, acquisition group, I would say I'm all for. Former giants that need to reverse split, I would say, why not choose something better? Pharmas are great if you want to place a bet and you believe on what they're actually developing. There should be information on what they're working on. And so if you believe that it has potential, the thing with all of these, though, is basically no information is new. And I mostly believe in the fair pricing of the market. So if you are finding out about some pharma company that has some new drug, miracle drug is going to fix the world. Doesn't everybody else already know about that? Why do you think you're the first to hear that news? And so chances are, if you get in, you're already buying at an elevated price. So, okay, so let's get into why they are attractive. As a beginner, I already said you can afford them, so that's nice. Obviously, the largest driver here is that a large percentage change is easy to achieve because the stock is so little. So to go from 72 cents to 99 cents is very, very easy to do, and that's a huge percentage gain. And so if you have 10,000 shares, you just made a huge amount of money, so you can quickly boost your account. That's what people envision when they're getting into it. So you can day trade these in a cash account. You can do the whole PDT thing and only do 3 day trades per week, or you can do quick swing trades, which would be 1 to 3 days is what I would sort of label that. But the point is that you're just trying to get in and get out without using a day trade But yeah, so those are all things people are interested in when they're getting started. But I think the reality is they are priced the way that they are priced. It's for a reason. So, um, if they were worth $100, they would be worth $100, but they're not. That's why they're priced so low. And that's obviously not to say nothing. There are no stocks that start off low and then moon. Obviously, that happens, and it happens all the time. It's just whether you can pick that one stock um, that that is the correct one or the thousands that aren't. So it's sort of like the day trading guru things where people post pictures of their success and you see that and you're like, oh, well, I can do that as well. And so you try it and you blow up your account. And then you flip and say, oh, okay, the whole thing was just a scam. The reality is you're not playing the right position, having the right mindset. And so that's why we here on this channel and my website have a different, more stable, more realistic, more grounded view of the market. But anyway, let's move on. So you're using the low value as your leverage, right? So like I already said, you can get a huge percentage gain very easily because it only takes a couple pennies to go up for you to realize that percentage gain. But I would argue that options give you leverage as well because they do. So why would you choose a low value stock instead of choosing options in a high value stock? Both will achieve the leverage that you want, but one is using a reputable company and one is using a company that is most likely going to zero. So, so obviously the next bullet point is, wouldn't you rather risk your hard-earned money, whether you earned it at your job and are investing it here, or whether you built your account up from a small account, but say you started with 5 and then you're up to 20 now. Do you really want to start back over at 5 or less? No, you want to keep that 20 and you want to keep building it. So I would rather invest in companies that I trust and use. Even if you use them, though, that's not necessarily a good indication of whether you should invest in them. I don't actually have Apple stuff. My wife does, but I'm not an Apple fan as far as the products they sell, but I'm a fan of them as a company, and that's why I choose to invest in them. But with the Rite Aid example, I use them for my pharmacy multiple times per week or month or whatever, but that's also not some company that I want to invest in because I'm not necessarily a fan of the company as its financials are concerned, etc. So the things you need to think about are, what if you time it wrong and now you have to bag hold that stock and it's likely to go to zero? Are you okay losing that money? Do you think that the company, after this initial spike, will spike up again in the future and then again and again and again and at higher points that you can get out and not take a loss on it? So if I get into Amazon when it's down and then it continues to go down way longer than what I think, right? So I thought it was going to go down for the next week. So I purchase some stuff now and maybe I average down a little bit. And I'm thinking, well, next week it's going to go up. So now's a great time to buy. Well, then the next 2 and 3 and 4 weeks, it continues to go down. Do I think eventually Amazon will get to a point where I'll be able to exit at least for even, if not still make a profit? It might be in 6 months, but do I think that that could happen with Amazon? Absolutely yes, because it's a good company. So eventually they will get back to where they were. With a small company, these spikes happen and then they don't happen for years, if ever. And again, the position is constantly degrading in value, and so it will go to zero eventually, and you've lost out on all that money. So I guess that's just another example of why you should invest in things you believe in, and do you actually like the company is the last thing there. So sort of what spawned a lot of my motivation to do this video was a Reddit post. So, I'm just trolling on Reddit, not actually trolling. I'm not a troll. I'm reading on Reddit, and this guy, I'm in a penny sub, and this guy starts this account with 5,000, and he works up to like 20 or 30 or something like that, maybe even 50. I'm not sure, but he spent a great deal of time, and at this point he's getting cocky because, and this is a real example from this past week, um, because he was confident that what he invested in was going to shoot up. And my first reaction there is you can't be confident with how something is going to move. Nobody knows where anything is going to move. Certainly not out multiple weeks. That's anybody's guess. And if you're trying to sell that, you're delusional. You're kidding yourself because you can't predict where the market is going to go in general, a specific stock in general. You can have a hunch, obviously, but anyway, he had made 2 or 3 bets that went right and got him to where he was. But the sample size there, if you're scientific minded at all, the sample size there is extremely small. And so he went, 2 or 3 plays and they went great. I don't want to take that away from him. That's great that he did that. But then what he said next really blew my mind. Once he hits 100,000, then he wants to stop doing pennies and move into some legitimate blue chip companies. And I was just like blown away. You want to take 5,000 and wait till you get the whole way to 100,000 before you start investing in legitimate companies. I just couldn't believe that that's what his goal was. And of course, to achieve that huge gain, he had to invest his entire account into one position. So let's move on because that's my third bullet point here. But 5,000 is definitely enough to start trading options. I'm doing the 2 to 10K challenge, so you can definitely start off with 5 and do good positions, and you'll in I'm not going to say like it's easy and in 3 months or in 1 week or something you'll be up, because I definitely don't want to promote gambling with options. That's a thing too that you shouldn't do. But doing a more stable methodology is totally achievable with $5,000 with options. And now that he's up to 30,000, he can really make a lot of money off of options. Just doing some more stable stuff. He can even have some gamble plays, lottery tickets in there if he has that desire. So you're going to be making enough money off of that 30K that you can still continue to grow and play some lottery plays that who knows might hit it big as well. But with any style, no matter what you're doing, if you are betting your entire account into one ticker, one position, even if you're spreading out, say you own stock and then you have some different options with different expirations and all this stuff, so you're trying to diversify. If all of that is tied up into one ticker, you are going to blow up your account. Your luck will not last forever. And so he wants to go from wherever his account's now at 30 or whatever and continue doing his whole account per position until he hits 100K. And I think when you it's also about building habits, right? So if you have this mindset and this habit of putting your entire account into one position, you're going to keep doing that. And as long as you continue to see success, you're going to say, hey, this is working for me. I'm going to continue to do it. But we all know that's a bad habit. If you sit back and you think about it, that is a bad habit. And just because it hasn't burnt him yet doesn't mean it won't. And then when it finally does catch up to you, it's too late. So you need to form your good habits before they blow up your account. The stock market is all about staying in the game and giving yourself the opportunity to make up losses in the future and to make future gains. But you can't do that if you're out of the market and if you blow up your account. Okay, so last bullet point here is if you hate options, you can still do fractional shares in good companies with Robinhood or with other brokers. I don't personally use Robinhood, at least not that much. I have some stocks over there, and I'm thinking about doing the 2 to 10K challenge, my next one, on Robinhood, just to show that it can be done, even though it's all the same market. But people are curious. Anyway, but Robinhood has fractional shares. I know a lot of people use it. there isn't the leverage there, but at least you're in companies that won't turn around and stab you in the back. So um, even if you buy high again on Amazon and it dips, the company will come back around and you'll be fine, especially when you're depending on what your time horizon is. But if you're looking, 1, 5, 10 years out, and you have Amazon at today's prices, that's a no-brainer. If you can hold it that long, you will absolutely have made money. Okay, so I've gone over my spiel on how I don't care for pennies. You all obviously all know that by now. But say you're still not convinced and you need to play pennies. Okay, that's fine. I have some pennies right now. I don't publish those trades because of how speculative they are. And um, so we'll say I probably have less than 10. It's like 7 positions now, and they're all for $500 or less. So they're less than what I would put towards a normal options position. And so they really are, we'll say, lottery tickets in case any of these uh, play big. And most of them are the SPACs, the acquisition groups, although I do have a couple other ones. So I'm not saying you can never play them. Obviously, that would be dumb. There are definitely some legitimate companies. I'm just saying don't build your entire strategy around them. That's what I'm saying. Okay, so if you're still not convinced, you want to do strictly pennies. That's to each his own. You can do that. How would you play those? Well, you play them the same as any other stock. So you might want to look at the 4-day EMA, and once it crosses from below to above, then that means the stock is trending up, and so that might be a good entry point. And then you're also maybe looking for the RSI to get above 70. What you're looking for then, a lot of people use the RSI to try to help determine when it's going to roll over and start going down. But if it's getting above 70, that's the hot zone where people are starting to FOMO into it, and you'll see a large last minute run up in the stock. And by last minute, I mean that could still last a week or two or whatever. But the point is, the stock is starting to heat up. It's starting to hit people's radar because it's crossed over 70, and it's starting to move more exponential. Um, so those maybe are two indicators that are telling you, hey, these are stocks I want to get into. Anytime they touch the 4-day EMA and are coming down, that might be a buy opportunity, and then it comes up, and then you can sell, and then it touches back down, and you can buy back in if you want to play it that way, or just continue to add your position on the touches. And then you would ride as it's riding up the 4-day EMA, you might hold that position until it crosses below. Once it crosses below, then you could sell that. The put supper there. If it's a super low value stock, the indicators may not be as valuable, and it might be the case where, especially with those, where you'll get a huge initial spike and then it will fizzle out and they'll never moon again, or they might do it, 2 or 3 days in a row. But then, if you haven't gotten out by then, you'll get left holding the bag. So the key here, though, is to obviously not FOMO into your entry. If you're entering as it's exponentially rising up, then your odds of holding the bag at the end of the day are greatly increased. You need to anticipate that move up, or get in your position and don't ladder into it. Just whatever, you invested $500 as it was heading up, and then you take your exit, but you're not continually adding to the position, because the time that it's going to be in the spotlight is its ticker has already started, and it's going to, it has whatever, 2 more days, people caring about it, and then after that they'll all close their positions and be out of it. So obviously the most important thing is that you plan your exit. People say, well, what should my exit be? And there's no steadfast answer. It's, do you think that ticker still has legs to continue to go higher? And old saying, obviously, is nobody ever went broke taking profits. I would rather leave with a 300% gain and miss out on 1,000% gain than holding because I'm continually waiting for it to go higher and higher and higher, and then exit out with nothing. You know, that happens all the time. People miss their opportunity. You want to sell into the strength, so that way you can close out your position very easily. And I did say, you know, the one indicator can be is if it's still above the 4-day EMA, that can be an indication that it's going to continue to go up. But again, that depends on the price of the stock itself. And you can use our scanner to help you find good candidates. There are obviously lots of good scanners out there, but obviously being a website owner, I have to mention that. So I will show you how to do that in a second, but closing remarks, you know, leave comments and like if you could, subscribe if you could. That definitely helps out to promote the videos. Here's a disclaimer. Okay, so let's hop over to the scanner. So what I did was I went into filter and I select the drop down, hit price, and then you hit add, and it will change this here, and then you do price between 1 and 10 and hit apply. And I did that. Now what's really messed up, I had to look at, there's obviously a bug here, but like Chipotle is here and Amazon is here. Those are clearly not worth those, but you can quickly tell what is by clicking on this chart icon over here. And so now it will say this is 1700, so that's not a candidate. I know CMG isn't. Let's go to ALO. Okay, so that's 126. The next thing you might want to do is verify on the platform that you're using that this is even available, because you know, Robinhood doesn't have a lot of stocks available, especially if it's sub penny. The one thing my scanner does do is I don't have anything that's less than $1, so $1 is the minimum, because I really don't think you should be playing anything under $1, but that's just so if you're looking for sub dollar ones, you'll need to use another scanner. But here's what I was talking about. Now we're at 50 on the RSI down here. And so it would have been hard to know that that was a good time to enter it. But now we're up here at 70, and we've already missed some of the run, but it's still not a terrible entry. So, so if you use the 70, you would have gotten in somewhere around here and probably at $1.08, and you could have it peaked out here at 135. That's obviously super optimistic, but you could have probably closed around 126 since it's been hanging around this area all day. So that's not a terrible gain, especially when you have, you know, whatever, 500 shares. So let's go to MICT. I actually don't have the 4-day EMA on this chart. This is Bollinger Bands and VWAP, and then moving average, and then MACD and RSI. You can change that by going through the, I always mess this button up. Wow. You can change the settings that way. Anyway, you have to play around, but you can change the indicators obviously to be the ones. It probably would get reset with each chart, so it's easier to come out to TradingView, the actual web platform, instead of my embedded view, and then type in the symbol up here to get it to how you want it. Because right here I have SMA 50, 120, RSI, and MACD. I still don't have that 4-day EMA, but I don't day trade a lot, so I don't need it. Okay, so this one's 202, and we can see we've already missed the move. If you think it will hit another spike, you know, now I probably wouldn't enter till we got down to here. 1.7 sort of looks attractive to me, but that's if you think it will have another spike. But then, you know, look back here. Go to the 5-year. The general trend is, you know, down and then flat. For 2 years, it's been flat. And so, do you think that this spike is going to last? Maybe, maybe not. I'm pessimistic with pennies. Anyway, so I think I've wasted your time enough. Let me know if you have any questions below, or any way I can help steer you away from pennies. If you do have any questions, I don't mind answering them about pennies, but let me know what you think. Thanks, guys.